Hopefully, I can even think straight. I just finished watching the Rams game, which I've been watching Rams game. I've been watching football, let's call it, for I don't know, 60 something years. That was one of the best games in history. It was absolutely amazing. Anyway, on to the subject at hand. Listen, the other day I did a video. You might have seen it. I think that was on Friday night, maybe, or no, it was yesterday. It was on Saturday afternoon where I talked about the impact of the election on Tesla. Would there be any impact based on who wins on Tuesday? Went back and forth. If you didn't see that later on, I'll put a card up about that. But after thinking it through just a little bit more, I think I have to add something more to it. I said, listen, I believe both candidates are going to have a fine economy next year. I think the Trump economy will be better, but that basically either way, we're going to have a fine economy next year. I said, yes, there's obviously going to be issues with regard to Harris being in office, maybe with not giving Tesla any benefits and maybe, continuing some of this nastiness that's gone on with the existing, administration. But that overall, I think Tesla has, they have it's all set up for them with robotaxis and with Optimus and with everything else that they're doing. And so much of their business is international. I just don't think that Kamala could have a huge impact on whether or not Tesla gets all their goals taken care of. But what I did forget, and I wanted to add this, I wanted to, set this all up. But what I did forget, I do think that the street will believe that the Harris win would be bad for Tesla. So you could see a little bit of a fall off on Tesla stock as a result of that if Harris wins. Vice versa, I think they will consider it to be a very big deal if Trump does win. I think they will give the stock a bump, maybe a pretty good bump. That I didn't include in my analysis the other day, but that's all short term. Over time, my original thesis continues to be it's not going to really matter that much. Okay, it's going to matter, but it's not going to matter enough to get all excited about that aspect of it. I'm sure you have all kinds of reasons to be excited one way or the other coming up Tuesday, as we all are. Oh my gosh, I'll be glad when it's over. Okay, from Tesla Economics, he gives a very nice summary about Elon Musk being the most important person in the world right now. He says X is the most important platform for the freedom of speech. That's X.com, for truth, for the news, and just getting stronger and stronger and bigger. And that's, Elon's deal. And it's amazing and it's important. Whatever you think about the current politics, you have to believe that what Elon is doing on X is important. Number two, Starlink is the most important company to enable people to have access to the internet in the world. And not only access to the internet, but in crazy places where you wouldn't normally have it, as well as on your cell phone. If you're lost or, where in some place where there is no cell phone connection, you'll now have a cell phone connection. Tesla is the most important company to transition the world to sustainable energy in the world right now. And then I add to this idea that, if you add robotaxi and Optimus, providing a future of human abundance. I mean, how much more important could it be than what's going to happen with robotaxi and with Optimus? Then you've got SpaceX, obviously the most important company by a ton to make humans a possible multi-planetary species. But he didn't even mention that it's providing 1,000 times less expensive access to space for all kinds of experiments and space-based industry. And then xAI is the most important company to understand the universe in the world right now. That's important. I think it's going to be great. But what about the fact that it's going to provide an increase in productivity that will bring the entire world to greater abundance? I believe they're going to win that race. And it's going to be one of the most important things that Elon's working on right now with the largest supercomputer, the largest neural-based supercomputer in the world. Neuralink, and doubling this year. Neuralink is the most important company to help the paralyzed and have another chance of life. in the world right now. Boring Company, the most important company to fight soul-sucking traffic in the world right now. Anyway, it's really hard for me to understand how he says, this is his conclusion, and I agree with him. It's really hard for me to understand how anyone in the world can hate and want Elon Musk to fail right now. This is from AJ. He talks about China's sales, the importance of China's sales in the fourth quarter in terms of making the number. He says if Elon is going to make the bullish fourth quarter guidance, roughly 515,000 vehicles, but then we need to see stronger China sales going forward. I said the other day, other people have said, gee, it's kind of hard to imagine China getting a lot of extra sales because they don't get this big fourth quarter bump like we do in the Western world. But they do get a bump in the fourth quarter. So I would expect to see some advantage there. But he goes on to say, he says his fourth quarter estimates assume that the majority of the required quarter-on-quarter growth from the 483,000 level in the third quarter will come from China because there's no evidence that North America and Europe sales will see a major increase, and the Cybertruck ramp is not going to be enough to cover it. Now, the flip side of that is that AJ himself just said a few weeks ago that it is very common for Tesla to get a 40 to 50,000 car bump in the fourth quarter. And a lot of that does come from the normal fourth quarter situation where people are more interested in buying vehicles than they are the rest of the year. Number three, to get a total of 515,000, we need approximately 209 China sales, he feels. He says, number four, this analysis compares the second quarter and third quarter sales progression during the respective quarters. And he says, assuming 239,000 fourth quarter China sales, we can see that the cumulative sales are trending below where they need to get there right now. And he says that sales pattern, which we see the low sales in the beginning of the quarter due to exports, but then he feels that in order to get that we only have 4 data points so far, the first 4 weeks, too early to be really drawing any conclusions, but we would need, he feels, to see at least 13,000 this week, or otherwise the implied numbers that are necessary just get very, very difficult. Bottom line, he says, we don't see a really strong number on Tuesday before the market opens. It appears unlikely China can deliver enough volume to do the heavy lifting to get us to the management's guided number. Well, that's one opinion. And I think it's we always pay a lot of attention to what AJ is saying. So he goes on to say the big picture is a deliveries miss would likely cause some short-term volatility. Number two, stock would quickly return to the AI product equity thesis. Number three, hence this would offer more buy opportunities or trim opportunities after a typical interquarter rally for a subsequent lower re-entry to maximize share count. Lastly, it's unlikely that the market priced in Elon's 515,000 fourth quarter deliveries. Please remember, consensus is stale at right now. We'll have to wait till December to get a meaningful update from the street, from the other participants. They're looking at less than 500 right now on average. All right, from the 𝐒𝐦𝐚𝐲 letter, they are saying, is this, let's see. 𝐒𝐦𝐚𝐲 says that in China, Dong Shetty conducted a 56 mile per hour, 30% overlap crash test involving, this is not from 𝐒𝐦𝐚𝐲, this is from Tezarati, I think. No, maybe it's 𝐒𝐦𝐚𝐲. Anyway, okay. Involving 30 vehicle models to simulate a car colliding with a truck, Tesla got the best safety rating among all those vehicles. Now, from Tezarati, the Tesla Model 3 all-wheel drive and rear-wheel drive are both made up of 75% US and Canadian parts, tying for the most North American-made components of any vehicle in the market, according to the National Safety Administration. The agency shares the reports under the American Automobile Labeling Act, and Tesla's reported 2025 lineup ranged from 60 to 75% across all of them. Meanwhile, the only vehicle to include as many North American parts as the aforementioned Model 3 units were the Honda Ridgeline Sport. Tesla's Model 3 performance in all Model Y units followed the Model 3 with 70% North American components. The Cybertruck and Model S were at 65%. The 2023 Tesla vehicle with the least US and Canadian-based parts was the Model X at 60%. That's still more than the vast majority of the General Motors, all of the General Motors and Ford products. Yahoo Finance comes in with this. They say, did you know that there are some financial metrics that can provide clues of a potential multi-bagger? In a perfect world, we'd like to see a company investing more capital in its business. We're talking about Tesla here. In a perfect world, we'd like to see them investing more capital in its business, and ideally the returns earned from that capital are also increasing. But as you can see, a company, let's see, I'm going to start over with this, and I'm not going to edit it out, so let's just start over. For those of you who, they're talking about return on capital. It's a measure of the company's yearly pre-tax profit as a return relative to the capital employed in the business. Analysts use that formula to calculate it for Tesla. Return on the formula is return on capital employed equals the earnings before interest and tax, the EBIT, not EBITDA, but EBIT, EBIT, plus total assets, the parentheses, plus total assets less current liabilities, net. Okay, in this case, it is 0.091 equals US 8.1 billion plus US 120 billion minus US 31 billion. Now, based on the trailing 12-month average, so they end up with a 9.1 return on invested on credit, on return on capital. That is a low return overall among all industries, but it's much better than the auto industry average of 75%. But Tesla is forecast to grow earnings and revenue by 14.1 and 14.4 per annum, respectively. The EPS is expected to grow by 12.1 per annum. Return on equity is forecast to be 15.4 3 years from now. There's also another one called return on investment credit, return on invested capital. And on that, Tesla is commonly in the like 25 to 30 range. This is Randy Kirk, by the way. I'm sorry if I said to myself, I sound like I'm just like reading this at rapid speed, but I don't know what it feels like to you. It's probably because I'm so crazy after that game. Anyway. The 𝐒𝐦𝐚𝐲 letter is actually, this is what the 𝐒𝐦𝐚𝐲 letter actually said. And by the way, hit like and subscribe and notify. He says, this is concerning. The U.S. economy lost 28,000 private jobs in October. That's the first net loss since December 2020. Furthermore, the 3-month moving average has declined to 67,000 per month. That is the lowest since the 2020 pandemic. This is well below the average of 150,000 monthly private payroll additions seen in 2018 and 19 prior to the pandemic. He says the worst part, full-time private sector jobs have dropped by a whopping 1.5 million year over year. Such a drop in full-time private jobs has never been outside of a recession. So we go back and forth between, are we in a recession or are we not in a recession? And da, 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 da. So maybe I'll turn out to be right that June was the beginning of recession and maybe we're still in it. Because again, it's this balance. It's a balance between the part of the economy that's doing okay and the part of the economy that is doing horrible, that's clearly in recession. And so which one of those weighs out in the end? Which one of those is actually the real number at the end of the day? All right. So what do we got coming up this week? Well, first on Monday, we have factory orders. Last month, they were down 0.2, expected to be down 0.5. Everything that we've seen would suggest that factory orders will be down. They just continue to be. That's one of the groups, as you know, that's in recession, has been for over 2 years. Manufacturing not doing well. On Tuesday, we get the U.S. trade deficit. Last month, that was actually positive 70 billion. I didn't remember that, but this month they're expecting that to reverse itself to a negative 84. But quite frankly, over 2 months to have a trade deficit of almost flat, that'd be actually not that bad. And then also on Tuesday morning, we get the ISM Services Index. It was at 54.9, which is very strong last month. They're expecting that to drop down to 53.7. And I don't know why they would think that the services world is seeing some kind of contraction comparatively. A 53.7 number would be fine, but it's a contraction from what it was doing. Wednesday, we get the S&P final U.S. Services PMI. Last month, again, at a good number at 55.3. this month. They're not willing to give us their expectation. I have seen nothing to suggest that services are slowing down. We'll see what happens on Wednesday, Tuesday and Wednesday, apparently. Then Thursday, of course, something else happened on Tuesday. I should throw it in. There's an election, but we don't know if the election will turn out to give us a winner. And even if it tells us who wins on the presidential level, we probably won't know the final outcome for the entire Senate, although maybe we will. And we definitely won't know the final outcome on the House for days. So there's going to be some additional days of concern as the week plays out. But expect if Trump wins, and that's known before the market opens on Wednesday or sometime during the day on Wednesday, this will be a positive. If it is stretched out, if it takes a few days for them to find out, I would expect some market fade from any uncertainty that might come as it plays out over several days. And then if Kamala wins, it might go up or it might stay flat. I don't expect it to go down significantly on a Harris win. Bonds might drop some, maybe. I'm not sure. That'll be interesting to see what happens. All right, then on Thursday, we have initial jobless claims. That's always interesting. Last time, 216,000. This week, they're expecting that to pop back up a little bit to 220. I have no idea one way or the other right now. Then the U.S. productivity preliminary. So this is the first of three each quarter. Each month in the quarter, they give a different number. This is the first number for the third quarter, and they're thinking that it will come in at 2.5%, which is the total that it came in for all of the last quarter. So 2.5 would be a fine number, but not a great number. What we're looking for is the beginning of evidence, not only that we're back out of all of the nonsense from COVID, but that also we're starting to see some of the productivity from AI hit this number. And I'm looking for this to start hitting like 3.5, 4%, et cetera. Then we get the wholesale inventories number. As you know, I don't find this to be very interesting unless it's a big, big change. Last month, it was up 0.1. This month, they're expecting to be down 0.1. So that's not a very big deal. On Thursday, we also get the FOMC interest rate decision and Fed Chair Powell's press conference where he talks about that decision. Everybody, it's like almost 100% of everybody, including me now, are expecting a 25 basis point cut. And then it'll be interesting to see what bonds do after that cut. Do they stay up here at 4.3? Do they move down a little bit more, in the 4.1 range? Do they maybe even get back down to 4.0 again? Really, really going to be interesting to see how the long bonds react. Now, the short bonds might continue to come down because this will impact short-term interest rates more than long-term interest rates. All right, then we've got consumer credit coming in. Last month, it was up 8.9 billion. This time, they're expecting it to be up 14. 14 would be a lot closer to a normal additional credit extension by consumers out there. And then on Friday, we get the consumer sentiment number. Last month, that was at 70.5, which was disastrous, horrible, with terrible optimism. And they're not expecting that to change much, coming in at 71%. Excuse me a second. All right, so where are we in the pre-market right now? Let's go ahead and check out. We will start with, of course, the bonds to see where they are. And the bonds right now, the 10-year, whoops, so sorry. The 10-year is continuing up. We are now at 4.386 in the pre-market, almost back to 4.4. What a crazy number. So the bonds are not, at least the long term, is not responding at all to an expectation of that rate cut later this week. They're still probably looking at the presidential election and trying to figure out what to take away from the election. Then we've got the 2-year coming in, also going up at 0.9 of a basis point. We have got the 6-month. You see here, we've got that. I'm sorry, the 3-month is actually down a little bit, and the 2-month is unchanged. So when I say a little bit, call it unchanged for the 3-month also, 0.1 of a basis point. So that is what I'm kind of expecting to see this week. We might see the 10-year staying up, staying kind of flat, maybe coming down a tiny bit, but maybe we start to see the 2- and 3-month starting to come down, which might impact some of the things that Tesla would like to see, like maybe a better rates on car loans. All right, let's look at oil. Oil prices continue up strongly, up $1.14. We're now well over $70 for Texas Intermediate at 70.63, Brent at 74.22. Natural gas coming off of those highs. Remember, the explanation was, oh, they're going to need a lot of natural gas from the data centers. Well, I think it's way too soon for that play. So I don't think that's what it was. I think we're just looking at normal expectations about winter. And right now it's coming back down to normal. Well, it's still high, $2.59. I don't know what to expect from the winter. I haven't looked at the long range forecast for the world, or in particular the US and Europe, to see where that might be heading. Okay, gold down $3.70 at 2,745. So continuing to back off a bit from that all-time high. And silver up a little bit, actually, at $32.71, but also well off that $34 and change. Copper up 0.31% at $4.38, right in the range it's been recently. The dollar down slightly, 0.7 against the yen, up a bit, 0.48 against the euro. And we've got Bitcoin continuing to slide off, 68,834. Now, some people are saying that Bitcoin is moving based on the Trump, it's another one of the Trump effect. And you might have heard that the betting markets have come down in terms of their expectations of a Trump victory. They come down rather radically from being about a 63-38 split down to like a 55-45 split. And that's the Real Clear Politics average. And so I'm guessing that maybe crypto is doing the same thing, backing off just a little bit in terms of their expectations. What are my expectations? Many people have asked me, boy, it's so darn close. I would still call most everything that I'm following right now would say that Trump is going to win, but it is too close to call. I would not put my own money as a bet. Let's put it that way. Okay, so there you go. All right, what about the equities? The Dow down 129 or 0.31 at this point in the pre-market. S&P down 650 or 0.11. We've got the NASDAQ down 16 or 0.08. So in general, looking like the market could be a little soft in the morning if those hold up. All right, that's all I got for you right now. I know we have very exciting football coming up in the Sunday Night Football. So for those of you who have taken the time, maybe in the halftime, or maybe you're doing what I suggested and watching the game with the sound off and listening to me, whatever it is, or maybe you'll wait till after the game. I'm so glad that you took the additional time to listen to tonight's program. And I'll put those. I'm going to put 3 cards up, though. I know you're not going to have time for this. But yeah, what I had to say about the upcoming election and its impact on Tesla, and also 2 cards, because if you're not following what Brian Wang did with regard to Robotaxi, you're just completely missing out. And I'll put both of those up as well. All right, that's all I got for you right now. It has been great talking to you.